Hello, good morning, ladies and gentlemen. Welcome to another promising session as we take a technical dissection of the current market structure to decipher what our next line of action will be for today. But before I go into the details here, I first of all want to apologize for the event that happened yesterday, as I never knew that there was no audio in that video. In fact, I saw the comment, I did some adjustment, but never knew that the adjustment never got affected. So it was just too late at the end of the day. I saw that there was no audio on that video, so I'm very sorry. So I had to ensure that things work out fine this morning. So I hope that we can hear me clearly at this particular point in time. So if you can do that by confirming that you can hear me in the comment section, I will really appreciate. So with that being said here, I want to be diving into the market structure to decipher what our next line of action will be for today. And yesterday was quite a massive day for us from the fundamental perspective. And one of the key moments that we were looking forward to was the FOMC and the federal rate interest decision. And at the end of the day, we had a situation where the policy rate was raised by 25 basis point to about 5% yesterday. And let's quickly run through the macroeconomic event that we had yesterday here. So I am on the economic calendar here, where we shall be looking at what really happened during the course of yesterday. So yesterday's trading session, we saw the consumer price index for the pound sterling, and from the result we have there, it was quite a positive one for the GBPUSD, as we had a 10.4%, and this is more or less an indicator to the inflation rate in that country. So there is something positive about the GBPUSD here. So we had a variance of positive 2.63 on this one. Then later on the day, we had the federal interest rate decision. Like I said earlier, we had a 25 basis point increase. So from the 4.75, we had now 5%, and it's quite okay compared to what we were expecting before, as in the 50 basis point. But at this point, we saw how the market reacted significantly to this result, as the US dollar dropped significantly well across all its major pairs. So we are going to be looking at that too as well, and it appears that the market is gradually coming back into normalcy, and we begin to see some tradable structure that we can use as a leverage for trading opportunity for today. So we are going to be looking at that today too as well. So with that being said here, I want us to just dive right into the current market structure to decipher what our next line of action would be for today. And for the first pair we are going to be treating today, the first commodity we are going to be treating today is the US oil. And like I always say here, whenever I start, I always buttress the importance of watching my videos that I share during the course of the weekend, which emphasize and explained in detail the situation around the current market structure from an holistic point of view. So I was able to look at it from a higher time frame down into the 4 hours time frame, where I was able to identify setups that we want to be using for this week. So if you watch this video, you get to understand or have a background knowledge of what we are talking about during the morning live session, because on the morning live session, what I do here is only look at the 1 hour time frame, and that is what we have been using to guide our trading activity since the beginning of the week. So with that being said here, let's dive into the chart. And the first commodity, like I said earlier, that we are going to be looking at this morning is the US oil. And in fact, on the US oil, we have been quite profitable on the US oil, as we have been buying the US oil ever since we identified the buy pressure just right around the $65 level. So for the sake of clarity and for the sake of those who are not part of my previous session, let's quickly run through how the week started with us on the US oil and where we are at this particular point in time. Then we will be talking about how to position ourselves ahead of the UK and the New York session today. So the week started with a situation here where we saw how price action was initially caught within a channel, and we had a resistance line for the channel at the $67.50 area. So this was where the week started for us on the US oil, and in fact the week started on a bearish note as we saw how price action dropped significantly well to the downside, hitting the $65 level, which happened to be the lowest point price has ever been since December 2021. At the same time, that area also shares an important structure with the support line of the descending channel I identified on the higher time frame. You might want to watch that video so that you can have a better understanding into the importance of the structure. So during the live session on Monday, we actually sold the US oil after citing the breakdown of the $65 level, which happened to be the support line for the week. And we saw our price action moved, I think, about 60, 70, 80 pips thereabout before we saw the bullish momentum began here. So what happened here was that price action took us out of our position in a loss at the beginning of the week. But one thing we waited for is the breakout of the resistance line. After, what we look out for whenever we have this kind of flat channel, we want to see price action either break out of the channel or breakdown of the channel for any trading opportunity. And thank goodness we saw the breakout of the channel the second day, that was on Tuesday, which triggered our buy position just right above the $67.50 level. And at this point we had our first buy position for the week. Then we saw opportunities to add more positions at the breakout of another key structure, which sits at the $68.50 level, as you can see here. Then we also added another position here on Wednesday, that was yesterday, at around the $69.40 level. And if you look at the current structure we have here, you will see our price action has consistently found higher highs and higher lows, emphasizing the strength of the buyers in this market. And to further emphasize this, we connected the series of higher lows, which happens to be the trend line we have been using since the beginning of the week to guide our trading activity. And what do I mean by this? I simply stated here that the bullish trend line here will be guiding our trading activity in such a way that if price action remains above that structure, we shall feel comfortable in our buy position. However, if we do have a breakdown of that trend line, then definitely we want to be looking out for selling opportunity. And what we have here since the beginning of the week, we can see our price action has consistently respected that bullish trend line to further give us a clue that we should still stay in our buy position. So for everyone who has been part of this profitable journey since the beginning of the week, kudos to you guys, as you will currently be running with over 400 pips in profit, at least for now. Now, with the situation we have here following our live session yesterday, remember during our live session yesterday we identified the setup here between the $69.40 area and the $69 area, which was a consolidation phase around that area, which further emphasized the indecision in that market at that particular point in time. And what made this structure also very critical for us was the fact that it was ranging right along that bullish trend line. And I told you yesterday that I'm of the opinion that a bullish momentum will be happening as long as price remain above that trend line. Then with the breakout of the $69.40 level, it was a beautiful opportunity for us to join and add more position to our existing trade. And I think I shared all these updates on my TradingView platform as we continue to ride that momentum all the way to the upside. So let's quickly look at how the last 24 hours happened here on the my commentary section on the US oil publication. So this is the US oil publication here. So that was our first stop loss hit at the beginning of the week. Then we saw the situation here where we had an opportunity to buy above the $67.50 level, and since then we have been riding that move all the way to the upside. So talking about yesterday is the 22nd, and this was prior to the live session yesterday, and this was the channel we identify right along that bullish trend line. Breakout of that structure was triggered our fourth position here, and we continue to ride the move all the way up. So I told us all yesterday night that we have 5 positions running in profit with approximately 600 pips. I told us all to secure all our buy position as we finally had the breakout of the $70 area. Then during the live session, during the early hours of today, I told us all that it appears that the bullish momentum is gradually thinning out, and then we should move our stop loss, and that if price action breaks down the $70 level, we will definitely be looking forward to selling the US oil. So this is the situation we have right here. And remember, for those who are still in this trade, I told us all to secure our current position, and based on the current market structure here, I will be suggesting that our stop loss should be somewhere just right below the $70 area. It could be around the $69.80 level. So let's give some room for price action to breed in anticipation of a potential trend continuation to the upside. So with our stop loss sitting at the $69.80 level, what is going to be our plans for today? How do we intend to trade this? Well, we can see the situation we have here. We have a simple structure here since the later part of the New York session, where we saw a sharp rejection of the $71 level. And as a result of this, I identified that structure and marked it out, as we are going to be using it to guide another opportunity to add more position to our existing trade. So what we simply want to be seeing here to add more position to our existing trade is to see price action take out the sell position around the $71 area, giving us some liquidity, which will be reflected on the chart in the form of a retest of structure followed by buying pressure above or around the $71 level on our lower time frame, which will be confirming the potential trend continuation to the upside. Though if you look at the situation we have here, it appears that price action has broken down that bullish trend line that we said we are using to guide trading activity since the beginning of the week. But the fact that price is still sitting above the $70 area is one thing I'm thinking we should consider to hold on to this bullish bias. So in as much as we look out for buying opportunity in this market, my opinion is that I always say this here, that we should always keep our options open for the possibilities of price action going the other way. And in this kind of situation here, despite the fact that we are looking out for buying opportunity in this market, we should also consider the possibility that sellers might likely come in this market. And why have I said so? Well, if we look at the structure from an holistic point of view, that is, if we go to a much more higher time frame, let's say for instance the 4 hours time frame in this case, you will see that I actually shared this on my in the video on the US oil, where we saw the structure on the 4 hours time frame where price action has been bearish since the beginning of this month. And to further confirm or emphasize the strength of the sellers in this particular market, we have a descending channel to map that out. And with the descending channel we have here, after connecting the series of lower highs and lower lows, we have the resistant line of that descending channel just around this area. And if we zoom into what is happening currently in the market, you will see that price action appear to have broken out of that resistant line of that descending channel to give us a possibility that buyers might likely come in, and that the resistant line of that descending channel is no longer strong enough to continue to hold selling pressure in this market. But one thing about this kind of confluence is the fact that it could turn out to be a false breakout, and we want to be taking that also into consideration. Now look at what happened during the New York session yesterday. We saw how price action came into the resistant line of that descending channel. It's the $71 level, and we saw the sharp rejection of that structure where price action, where the candle transitioned into a shooting star candle, and if you look at this from a technical standpoint, it is a sign that sellers are still very present at this particular trend line that we have here. So we need to be very, very careful, and that is one of the reasons why I said we should be moving our stop loss to secure this current position, as anything could happen around the resistance line of this descending channel. So in that kind of situation, all the break above of the $70 area could turn out to be a false one. And one thing, what do we want to be seeing here that will give us a clue that sellers are probably going to be coming in this market? Well, the only thing we want to be seeing is price action should drop back down the $70 area, and we start seeing selling pressure below the $70 level on our lower time frame to give us that confirmation that sellers are likely going to be coming in this market. So selling pressure in the sense that we start seeing price action reject the $70 area, where buyers find it difficult to climb above the $70 area, then we might likely be seeing a sell-off in this market. So anything below the $70 area will be welcoming selling opportunities. So we shall be looking forward to see how price action will be reacting to the structure. Though the situation here still looks very, very bullish, but if at any point in time price drops below the $70 area, we shall be open to change our focus towards a bearish momentum. But if it looks a little bit complicated, well, be rest assured that I will be jumping in the comment section on my TradingView platform to give you an update if anything surprising happens in this market. So let's continue to monitor price action, and I will be seeing you in the comment section right below the USOil publication on my TradingView platform. So that is that on the USOil for this morning. If you have questions, feel free to drop your inquiries in the comment section. So with that being said, let's move on to the next pair. The next pair we are going to be looking at this morning is the GBPUSD. And on the GBPUSD, what is the situation we have here? Well, if we look at what has been happening in this market since the beginning of this week, you will see that price action has been bullish actually, and in the last, since Monday, we can see that price has been ranging between the 1.22800 level and the 1.2200 area to emphasize the indecision in this market. But in the last 24 hours in this market, we've begun to see some bullish momentum that began here. So for the sake of clarity, let's run through my publication on the GBPUSD, as we want to see how we have been trading the GBPUSD in the last 24-48 hours here. So I will be going down into the 22nd. So on the 21st here, we started selling the GBPUSD here. We saw a retest of structure. We joined the bearish momentum to the downside, and as soon as price got into the 1.2200 level, we begin to see some buy pressure resume around that area to incite a bullish momentum in this market. And one thing we saw here after identifying this buy pressure around the 1.2200 level, which also shares a confluence with that bullish trend line that we identified on the 1 hour time frame, I was able to scale down to a much more lower time frame like the 15 minutes time frame, so that we can have a better perspective of what is really going on around that bullish trend line. And this was what I was able to identify here, and I published this immediately as we had a consolidation phase where price action appeared to be trapped between the 1.2250 level and the 1.21800 area, despite the fact that we are having a bearish trend line in this market. So a breakout of that structure definitely will be triggering a buy position at that point. And we saw our price action broke out that structure. We were able to scoop about, I think, 70 pips thereabout, as we saw how price selling pressure resumed around the 1.22850 yesterday. And I told us all that we said we identified a bearish setup on the 5 minutes time frame, since we are around a strong sell zone at the 1.22850 level. So let's quickly run through the live chart here, and let's quickly revisit what we saw yesterday that made us to sell at that particular point in time. So we were looking at things from a 15 minutes, I've deleted that anyways, but remember we had the If you watch my previous video, you will see how we identified a simple setup around the 1.22850, which supposed to, okay, this is it right here. We identified this channel. We saw something like a reversal pattern in the form of a double top structure, where the 1.22800 level served as the neckline of that reversal pattern, and we sold just right below the 1.22800 level. And remember, I told us all that we are going to be patient as soon as price gets into the 1.22450 level to see if we are going to be adding more sell position or anticipate a bullish momentum. And considering the fact that the 1.2245 shares a confluence with that bullish trend line, and as you can see here, price action continued to the downside. We added more sell positions at the breakdowns of structures like the 1.2260 and the 1.22450 level. And at this point, when we started seeing buy pressure resume around this area, I told us all to secure all three positions by moving our stop loss accordingly. And what happened afterwards was quite interesting. I think this was as a result of the immediate reaction from the Fed interest rate decision that happened yesterday, and we saw this huge spike. I actually missed out on this opportunity because I never anticipated it will go to the upside, so I missed out on that. But for those who actually took advantage of this opportunity, well done to you guys for being on standby to have caught that move. Now, later on yesterday night, I shared this publication here to guide our trading activity during the Asian session. So I said trend line becomes our yardstick for trading activities as we look out for breadown retest to welcome sell opportunity. So if a breakdown of the 1.2250 level happens, we want to be selling, and if buy pressure continues above the structure, then we shall be looking out for buying opportunity. And in fact, price did not break down that structure as we saw our price continue to climb to the upside here. And for those who are taking advantage of this opportunity, you definitely would have at least a minimum of 40 pips running in profit at this point. So for those who are taking advantage of this buy position here on the GBPUSD, well done to you for being on standby to have caught that move. So right now, what are we going to be looking at in anticipation of the UK and the New York session today? Now look at this critically well and try to be with me. One thing we have noticed here since on the 15th of March, that is last week Wednesday, is the fact that price action has been bullish in this market. And to further emphasize the strength of the buyers, we were able to identify this bullish trend line after connecting the series of higher lows. Now we have a critical structure here between the 1.2250 level and the 1.22800 area, which happens to have been broken during the early hours of today to give us a signal of the buy strength in this market. So we continue to hold on to a bullish bias as long as price remain above both the 1.22800 level and that bullish trend line. So we have a simple setup here on the GBPUSD that will be guiding our trading activity for today. So as we hold on to the bullish bias on the GBPUSD, we shall be using the bullish trend line and the price level at the 1.22800 level to feel comfortable in our buy position. And for anyone who is still in the buy position here, you want to be moving your stop loss to secure this current position, as we might likely see a sudden pullback in this particular market. And why have I said so? Well, if you look at the structure here and go to as far back as the later part of the New York session yesterday, you will see that we saw a sharp rejection of the 1.233500 level. That happened yesterday, and if you look at what has been happening here in the last 4 to 5 hours, we have been seeing sharp rejection of that same structure at this point. And from this current situation, what I can decipher from this current market structure is that there is a strong presence of sellers at that area around the 1.23350 level. Hence, we need to be very, very careful. That's why we are moving our stop loss to secure the current buy position as we continue to monitor how price action will be reacting to the 1.23350 level. Now, the situation here, if the sell pressure continues, well, I would have no choice than to remain patient and wait for price action to break down the 1.2280 level, which also shares a confluence with that bullish trend line. And remember, this bullish trend line has been guiding bullish momentum for us, supporting bullish momentum in the last 8 days in this market. So if it so happens that price action breaks down the bullish trend line, that will be the first time price action will be breaking down that structure in a week. And if that happens, it's a very beautiful signal that we might be going bearish anytime soon. So as soon as we have a breakdown of the 1.22800 level, definitely we want to be scaling down to our lower time frame. It could be your 5 minutes, your 1 minute, your 3 minutes, your 10 minutes time frame, whichever case it may be. We want to be looking out for selling pressure below the structure on our lower time frame so that we can be part of the sell-off in this market. And if a further breakdown of the 1.2250 level happens here, we definitely want to be adding more position to our existing trade. So this is what we shall be looking at to sell the GBPUSD for today. So the bullish trend line here remains our yardstick to guide our trading activity for today. Now, in as much as we think that sellers might likely come in this market, we also want to put in mind that if buyers continue, remember it has been a long-term bullish momentum in this market, hence we cannot negate the potentials of the buyers in this particular market. So if the situation here happens where price action drops back into the 1.22800 level and we start seeing buy pressure along the bullish trend line, definitely this will be another opportunity for us to add more position to our existing buy position here. So in that case, price has not broken down the trend line, price has not broken down the 1.22800, then definitely buy pressure around that area will give us a sign that price wants to respect that bullish trend line one more time. However, if price does not drop to the downside and instead it continues to the upside, hereby breaking out of the 1.23350 level, we shall be looking out for buying opportunity. And if possible, scale down to your lower time frame. Just a couple of rejection of that area is good enough for us to join or add more position to that buy position we already have running at this particular point in time. So that is that on the GBPUSD. It's a simple setup, but I will be with you in the comment section on my TradingView platform as we continue to monitor this price action. So if you have questions, feel free to drop your inquiries in the comment section while I move on to the next pair. So the next pair we shall be looking at this morning is the XAUUSD. And on the XAUUSD, we have actually been profitable on the XAUUSD so far this week. As we can see here, how did the week started for us on the XAUUSD? This was what we saw at the beginning of the week here, where we saw our price action was trapped between the 1,990 initially and the 1,970, which happened to be the support line for the week. Then we saw the breakout of the 1,990 briefly happen within an hour, and as soon as price got into that $2,000 level, we saw the sharp rejection as price action dropped to the downside. Then when we zoomed out of this chart structure, what we saw here made us to start thinking of selling the XAUUSD. So we took into consideration this impulsive move to the upside, and we saw that as soon as price got into that area around the 1,990 and the $2,000 level, we saw our price action transition into something that looks like a reversal pattern in the form of a head and shoulder pattern. So we have the left shoulder here, we have the head, we have the right shoulder here as price was unable to break out of the previous left shoulder high, and then we had price come back into the structure. So with the neckline sitting at the 1,970 level here, we looked out for a breakout of that structure to trigger our sell position, and we were lucky enough to be part of this move as we saw price action break down, retest the 1,970, and we rode the move all the way down into that potential buy zone area, giving us about 350 pips in profit at that particular point in time. And if you remember, during our live session yesterday, we identified this channel around that potential demand zone that we identified earlier, where I told us all yesterday that if a breakout of that structure happens, that will be a counter trend opportunity and has a tendency of giving us a retracement of this impulse leg, where price action may likely come into the 1960, 1970 or 1985 in anticipation of a bearish momentum to the downside. And this is exactly what has happened so far. We saw the breakout of that structure. Let me show you this on the public platform so that you can see what I'm talking about here and how we took advantage of this trading opportunity. So this is what we have here on my XAUUSD publication on my TradingView platform. So this is when we were selling below the 1970. So we sold, we added more position, and we were able to make over 1,000 pips on that move all the way to the downside. Now, yesterday's live session, that was yesterday 22nd, we saw the situation here where price action was trapped between the 1945 and the 1936, which was an indecisive phase in anticipation of the FOMC yesterday. And we all know what we look out for whenever we have this kind of setup. We want to either see a breakout or breakdown of that channel for trading opportunity to happen. Now, with a sell stop order and a buy stop order placed at both ends, that is the support line and the resistance line of this channel, we saw how price action broke out of the 1094, which happened to be the resistance line of this channel, to give us that opportunity to buy. So with a buy stop order there, we had a position triggered, and we saw during the FOMC and after the FOMC, we saw our price move significantly to the upside, hereby hitting our TP target at that maximum point at the 1976 level. So we had about 500 pips on that first position as price action hit that TP target there. And during the later part of yesterday, before I went to bed, I looked at the structure here, and because of the sell pressure identified at the 1976 area, I was thinking that we might be having a sell-off in this market. So with a sell stop order below the 1965 and the buy stop order above the 1976, I went to sleep. And this morning we had the 1976 triggered, and we had the buy positions running at this point. And I shared this during the early hours of today that we should secure all buy position, as we might likely see price action still break down the 1976. And look at what's happening right here. Let me remember that we expected that if the breakdown of that reversal happened, if we see a breakout of this structure, it might likely turn out to be a retracement back into structure that was broken in anticipation of a bearish momentum to the downside. So we should take note that the possibilities of sellers coming in at this particular point in time is still very, very possible. So like I was saying earlier, I wanted to show you something on this is what we saw here. And with the look of things right now, I have been taking out, or you will have been taking out too as well, as I told us all after price action broke out of that structure that we should be moving our stop loss accordingly to secure that current position. So right now we have the situation here running. So we have no positions running right now. And let's zoom into the current structure here to decipher what is really going on around this area. And for the sake of clarity, I would like to delete some illustrations here, which I don't think it's no longer necessary anymore, so that we can have a very lighter chart. And it will be okay. So let me delete this one. This is not necessary. All right, so here we are right now, and this is where we were at the beginning of the week. If you remember, at the beginning of the week, this is where we were, and this is the 1985, which happened to be the resistance line at the beginning of the week, where the first selling pressure we saw at the beginning of the week was at around the 1985. And right now you can see that price is back into that structure, but a little bit close to that structure, but not as close, not touching the structure at all. And for me at this point, this sharp rejection in the last couple of hours here, where candles are closing in the form of a shooting star, for me is a sign that this area is still a very strong zone for sellers in this market. So with the situation we have here, and going into the UK and the New York session today, I'm of the opinion that we might be seeing selling pressure resume in this market. Now that we have a buyers looking forward to a bearish momentum, how do we want to position ourselves in such a way that we can catch this opportunity? Well, the first thing I would first of all say here is that we are not buying the XAUUSD unless we have a breakout retest of the 1,985. And the reason simply is we want to see price action take out all the sell positions here to give us that confirmation and confidence to join a buy position in this market. So if that does not happen and the sell pressure continues below the 1,985, then we have no choice than to look out for selling opportunities. And how do we look out for the selling opportunities in this market? Well, we already have a simple setup following the impulsive move that happened yesterday. And look at the situation we have here. So following this impulsive move that started yesterday into the structure, as we saw price action trading between the 1,976 and the 1,985 since yesterday. Now there is this bullish, this pivot lows that we want to also take into consideration, as well as this area has been guiding bullish momentum supporting that impulsive move. So when we connect the series of higher lows here, we have a bullish trend line. So going into the UK and the New York session today, this bullish trend line is going to be our yardstick for trading activity. Now, how do we want to be using this trend line? Well, if price action remains above the trend line, definitely we want to feel comfortable in any buy position in this market. And like I told you earlier, we are not buying unless price action breaks out of the 1,985 level. Then you could have your buy stop order around that area, a retracement back into structure, respecting that bullish trend line one more time. Will definitely welcome additional position to our existing buy trade. However, if price action breaks down the bullish trend line here, trend line sharing a beautiful confluence with that 1,976, and if we go to the left here, since the beginning of the week, this is where we saw that first bearish momentum we took advantage of at the beginning of the week. So that area is a strong selling niche in this market. So if a breach of this bullish trend line happens, which also shares a confluence with that 1,976 level, then I want to be looking out for selling opportunities around that area. And if we scale down to our lower time frame and we start seeing selling pressure below that structure, that is buyers finding it difficult to break above the 1,976, then we'll have no choice than to anticipate a sell-off in this market. And this, if a sell-off happens, the structure here has a tendency of giving us multiple entries in this market. So we have structures like the 1,965. If it's broken to the downside, we want to be adding more position to our existing trade. And if the 1,960 is broken down again, we want to be adding more position to our existing trade at this point. And I will be advising you accordingly as price action moves in our favor on my public platform. As always, I will be giving an update in that regard. So right now we are looking for selling opportunities below the 1,976 level, where price will have broken down that bullish trend line to give us that opportunity to sell the XAUUSD for today. So it's a simple setup we have here. So I hope that I was able to make myself clear, and if possible you might want to screenshot my screen so that you can use it as a reference point to make your, whenever you want to make your individual decision on this pair. If you have questions, feel free to drop your inquiries in the comment section. So with that being said, here I will be moving on to the next pair, which will definitely be the last pair for today, and that is the USDJPY. In fact, I missed that bearish momentum on the USDJPY yesterday. I hope you did meet what you were part of that move. I missed that move. It was a significant one. If you remember, we were in a buy position since the beginning of this week after we identified buy pressure resume at around just above the 131.00 level. And if you remember vividly the importance of the 131.00 area on our higher time frame, for the sake of this video I will show you one more time so that we can see how important that structure is, and this will also help us to have a better perspective into the current market structure. So this is the daily time frame here, and the 131.00 level is an area which has been a major determinant of price action in this market in the last 11 months. As you can see, from the month of April last year till this moment, this area has been one point in time it was a sell pressure. We saw the breakout here in the month of May, and since then price action has been finding a support line around that area, hereby giving it a strong demand zone. Though we had a breakout here during the early days of this year, but price action climbed back above that structure, and as at this moment, in the last couple of days now, we have been seeing buy pressure resume around the 131.00 area to further emphasize the strength of the buyers at this particular point in time. So for me, around the 131.00 area is a strong buying niche in this market, so we need to be very, very careful, as the site of buy pressure around that area is still very, very possible. So I just wanted to show you the importance of this 131.00 level, which I obviously emphasized in that video in the link in the description box below. So let's scale back down to the 1 hour time frame after understanding the importance of that 131.00 area. So right now, at the beginning of this week, this is where we started buying the USDJPY. Look at what we have here. So this is the 131.00 level. So let me extend this out a little bit so that we can be able to relate this level with the current market structure. All right, so that's the 131.00 level. So we bought the USDJPY at the beginning of the week, just right above the 131.450, somewhere around that area. Then we added more positions here. We added more position here during the live session yesterday, and boom, prior to the FOMC, we saw our price broke down that structure, and boom, price went all the way to the downside, taking us out of all the buy position. I think we were able to make about 150 pips after price took out our sell position, our buy position, at where we placed our stop loss. Let's quickly look at this on my public platform here. So we will be moving into the 22nd of March, right? And we shall be checking. Okay, so this is where we were, and this was prior to our live session yesterday when we cited buy pressure above the 132.250 level, and then we see we had our position trigger. That was our fourth position in this market, and during the FOMC we saw our price broke down that structure to the downside, taking us out of all positions with approximately 150 pips in profit. And during the later part of yesterday's trading session, before I went to bed, I identified the setup here around the 131.500 and the 131.200. It was a simple flat channel around this area, where you know what we look out for whenever we have this kind of channel. We want to either see a breakdown or breakout of the channel for trading opportunities. So with the sell stop order and buy stop order placed at both ends, we had a sell position triggered as price action moved. I think about, let's see how many pips was that. Price action moved about 70 pips in our direction, and I told us all to secure all positions as we look out for more opportunities if it happens that price action breaks down the 130.550 level. Now, with the situation of things right now, price is back above the 131.00 level right now, hereby taking us out of all the sell positions we had over the night on this one. Now, with the situation of things right now, and considering the fact that the 131.00 level is a strong buying niche in this market, like we obviously identified on the daily time frame, definitely we want to be looking out for buying opportunity anywhere above the 131.00 area. So at this point in time, we've already missed this one, but if you are part of this one, well done to you, as anywhere above the 131.00 level will be a very beautiful opportunity to join a bullish momentum in this market. Now, if you had missed out on this one, well, let's remain patient here to look out for structures to evolve. It could take about 2 to 3 hours before something happens here, and it might not be up to that. So let's be on standby. If we do have price retrace back into the structure on our lower time frame, let's look out for buy pressure around this area. Then we could be part of the potential move to the upside on this one. So for me on the USDJPY, I will be looking out for buying opportunity for today, as if you look at what happened as soon as price got into the 130.550 level here, we saw sharp rejection of that area, which further emphasized the strength of the buyers in this market. And considering the fact that price is back above the 131.00 level, then the breakdown here will turn out to be a false breakdown, where price action trading above the 131.00 level is welcoming a buy position in this market. So let's hold on to this perspective here. I'm not selling the USDJPY unless we see price action take out the 130.550 level at this point. Now, if we zoom out a little further so that we can see what has been happening so far here in the last, hold on a second. Let's see this. Okay, if we look at what has been happening here since the first week of this month, you will see that price action has been bearish on this chart. And if we connect the series of lower highs, this is what you will see here. So connecting this point, look at, we have this point, we have this pivot high, pivot high, pivot high. Then we saw the breakout happen here during the second day of this week. And you all know what happens whenever a breakout of a significant structure happens. So let me zoom back out so that we can see things more clearly here. So when we see a breakout of a significant structure like this, we expect that one point in time price may likely come back to retest that structure in anticipation of another wave of bullish momentum. So this is a theoretical understanding, and it appears we are having something like that. As you can see, price action came back to do a retest of that trend line, and since the retest of that trend line happened, we have been witnessing buy pressure resume from that area. So for me, this is a beautiful sign that we are going bullish on the USDJPY. So as long as price remain above the 131.00 level, we shall feel comfortable in our buy position. So for me, the 131.00 level will be our yardstick for trading activity for today. So price remain above that structure will definitely be welcoming buy position in this market. So that is that for today on our morning live session. And I hope I was able to simulate all the possible scenarios that is likely going to be happening today. And I'm sure you are well equipped to be able to take advantage of any of these opportunities when they finally happen. Thank you for being around. I really appreciate, and I look forward to seeing you same time tomorrow, same time, 8:05 a.m. UTC, as we gather here again to review how well all the pairs we have been monitoring so far has been doing, and at the same time prepare ourselves for the last trading day of the week. Do have a wonderful evening, and I look forward to seeing you in the comment section on my TradingView platform as we continue to monitor price action. Do have a wonderful evening, everyone. Bye bye.